Hi, folks. Welcome to the Weekend Investing Daily Bite. On Friday, if you recall, markets fell dramatically in the last hour and a half, almost like a capitulating event where the weakest of hands just threw away whatever positions that they had. And of course, we were reeling under this additional 25% tariff from Trump last week. And it seemed, if you recall, on Friday afternoon that Monday perhaps is going to be a big gap down. And Nifty was also sitting at a huge gap just below where it closed. So a lot of folks were expecting a huge gap down on Monday and an extremely weak market. And exactly the opposite has happened today. Market did not go down at all today. In fact, a huge bounce has happened, and this actually comes uh, very close to the fact that most of the times market is not going to do what you're expecting. So that's sort of the underlying theme that you always must keep in mind, that when markets are just not giving you anything positive, does not mean that positive will not happen. So we may have been in a sort of a consolidation phase since September, and we are coming very near to almost a full year. Past consolidation periods have been perhaps 12 months to 15 months, 12 months to 18 months. So significant part of consolidation is already in, and you have to be more optimistic going forward, because the market is not going to announce that it has started to work. It will go up very rapidly, and then you will find out that, oh, I missed that bus. Anyhow, so do read the disclaimer fully, and let's proceed in the video. Do subscribe to the channel as well. Where is the market headed? The market is grinding down. There is no doubt about it. The trend is down. We are below the 200, the 100-day moving average. We are below the 50-day moving average. We are very near the 200-day moving average, which is somewhere near 24,000. You can see this huge gap that existed here, and we basically bounced off the top of that gap. But it was a very good bounce, which pretty much encapsulated the entire Friday's fall, and it was expected that the market is going to go really like a waterfall mode here on. So very good recovery, 0.9% on Nifty. Good recovery in Nifty Junior as well, 1.17%. In mid caps, 0.65%. In small caps, 0.45%. Not as much as the others. And Bank Nifty gaining 0.92%. So I think some semblance today of people coming to terms with where we are in terms of this tariff trade, and how likely it is that by end of August, whether something will get rolled back, and perhaps things may not be as bad as people are making it to be. The other good thing that has happened in the last couple of days is the announcement of 15th of August meet between President Trump and Putin, and it is likely that some reconciliation over Ukraine may happen, and that may give, in general, some relief from the global escalation that we've had. And in light of that, gold, of course, is falling, because gold doesn't like uh, stable markets. Gold goes up when markets are unstable. So gold is down 1% today at nearly 10,000 rupees per gram. Advanced decline ratio, you can see after this initial hour, advances are pretty much going up through the day. Declines are pretty much going down through the day. By the end of the day, almost 2 is to 1 kind of advanced decline ratio, which is very good. In general, you can see on the Nifty heat map, almost everything is green, barring perhaps some Hero Motor small fall. Eternal, Adani Enterprise on defense orders, Ultra Semco, Grasim, Tata Motors, SBI, Reliance, L&T, all moving ahead very nicely. And also, let me remind you that on Friday, when the fall was happening in the evening, actually FII numbers and DII numbers both were very nicely positive. So you will really be hard pressed to guess what the market is going to do. That is always a surprise. Swiggy has U-turned at plus 4%. Indigo is up 2%. Varun Beverages, Adani Power, DLF up 2%. Siemens, PFC, Bajaj Holding also up. Jindal Steel, Ambuja Cement also up. You had some small falls in Naukri, Havels, and Motherson, along with LIC. In the movers of the day, you have Tata Motors move up strongly. Management has retained the FY26 guidance of 5 to 7% for Jaguar Land Rover, so 3% up on Tata Motors. Tata Motors still down quite a bit from its recent high, and significantly down from all-time highs. SBI is the biggest sort of confidence builder today in the markets, plus 2.38%. Strong results, and the stock, as you can see, was not falling earlier as well. It was basically range bound, and now there is a chance that this range is going to get uh, uh, broken out on the upward side. Sectoral trends, all sectors up. This is not a common scene these days. PSU banks led by SBI up 2.2%, real estate also up 1.86%. Defense stocks, once again, I mean, after uh, uh, utterings from the chief at in the Pakistan Army, I think defense stocks are again looking up 1.22%. Infrastructure stocks up 1.1%. Autos up 1.06%, pharma also up 0.95%, and so on. No major sectors in decline as of today. PSU banks coming back into the sort of positive zone, I would say. Indian Bank, Union Bank, PNB, SBI, Bank of India all leading the sector up. And real estate is trying to make a comeback. Real estate has lost quite a lot of ground, about 12 to 13% from the top. Prestige Estates, Oberoi, DLF, Lodha, Phoenix doing well this day to day. Tweets of the day. So we have a new section here where we're talking about some tweets that you've liked on X. So this is exactly what I was talking about just a minute back, that you had some nice numbers from both FIs and DIs, yet the market felt like capitulation. The market felt like there's no buyer in the market. So market numbers can be deceiving. So don't equate FI and DI buy sell to daily market moves. Over a period of time, yes, that will make a difference, but not on a one-to-one day-to-day basis, because there are so many other players in the market. This other news that came through was that RBI has allowed all banks to, independently set the minimum balance. So ICICI Bank has come out and said that we want minimum balance to be 50,000. There were a lot of memes around it that TCS employees, at least the new ones, will not be able to get an ICICI account and so on and so forth. But the main point here is that free float income is likely to increase, assuming that ICICI Bank will not lose too many customers. The free float income is what basically the money that you're earning on the minimum balance that is just lying around. And free float income is amazing for many businesses. For instance, stock brokerage business. If Zerodha has, so many hundreds of thousands of accounts, and everybody has, 50,000, 1 lakh rupee or 20,000 rupee just lying around in that, you don't get any interest on that. But the broker makes interest on that. So the broker can, accumulate all that money, put it into any fixed deposit kind of an instrument, and then give that money to the exchange as margin. So significant number of discount brokers actually live off the free float income, and banks also have this huge cushion that they can give you 2% of savings interest rate, while the same money gets lent out at 14%. So a good move. I think ICICI Bank and other banks who will follow suit are likely to. This actually move may sort of convert into some banks becoming like more premium banks, and others being more mass market banks. So I think that distinction over some period of time perhaps can happen. I don't know whether that's good or bad for ICICI, but that's something that we were looking at. MTF, is it for investors? So this is the topic of discussion for our second video today at 8 p.m. Margin trading funding. That is what MTF stands for. And we will deep dive into that facility, whether you should or you should not use it. Thank you so much for watching this video, and I'll see you at 8 p.m. Bye.